Welcome back in Marketplace Wealth. Here's a question for you. How do you invest for retirement if stocks seem too risky and bonds seem to keep losing their value? Greg and Kristen Taylor from Legacy Retirement Group are here to talk all about it. They're financial advisors and hosts of a weekly retirement radio show called Winning Retirement, and they always have expert advice to bring with them. Good morning.
Thank you.
morning.
Good. Good
So
to be here.
we said it at the top. Last week, I know a lot of the stocks and they're kind of risky, but then they're changing. Where are people right now? Because I feel like the word is confusion when people are looking towards investing.
Well, you know, the problem, here's the problem. Everything's been on this steady uptick, right?
Yeah.
We had that little fluctuation back in 2015. And now that we're seeing some kind of normal volatility, really, that should have happened a couple years ago, now people are like, wait a minute, it doesn't always just go up. The stock market does do other things. So I think it's kind of like a shell shock almost, especially to newer investors
That makes
who
sense.
didn't go through 2008. So that's kind of where we're at.
And I will say, because every time you go, whenever you see the stock going up or down, you always scream and shout, it's going to rebound. I mean, it goes the other way. And you say that on the show. So you were expecting it. New people weren't expecting it. So what should their reaction be? What should people be doing right now in this case?
Well, the smart thing really is having a good balance in your portfolio.
Yeah.
And so a lot of folks are, they jumped on the bandwagon here in the last year. Even people that had been out of the market for several years jumped in. And so we use just an old rule called the rule of 100.
Yes, I've heard that.
And so if you take 100 and subtract your age, that's about the approximate amount percentage-wise you should have in stocks.
Okay.
And then the idea was to have the rest in bonds, but now we're kind of in that perfect storm. Bonds are volatile too, because as interest rates rise, the value of bonds go down.
So if you're not in stocks and you're not in bonds, are there alternatives that people should invest in that they should be looking at?
Absolutely, there are alternatives. And remember, he mentioned the rule of 100.
Yeah.
That's a rule of thumb, right? That's based on previous occurrences,
It can
right?
fluctuate, I'm
Right,
assuming.
yeah, we're just basing that off of history.
Yeah.
So when you're looking forward, especially those who are retired or getting ready to retire, that's the space we work in, there are alternatives because you don't want to be all in one stock or just all in multiple stocks because then you're not really diversified. So there's some strategies we use that have indexing to the market but with a zero floor. We also look at different wealth management strategies. We've mentioned WealthGuard on the show multiple times, where we can really attach a number to your threshold of what you would want to lose should the market drop, right? So it's a smarter strategy versus just buying stocks.
Right, and it's a tactical approach. So with a tactical approach, what we're doing is we're looking for opportunities. If stocks are all going down, there's not much opportunity there. If bonds are losing value, there's not much opportunity there. There could be an opportunity with commodities. There could be an opportunity with real estate or some of the indexing strategies Kristen mentioned. Those could all have possibilities for gains. And look, if nothing's really going up, I'd rather be on the sidelines and watching my portfolio drop 20 or 30%.
Well, there are so many options out there, and I know every time we ask you questions, you are right there with the answer, and you always come to our show with a great offer. So if you are 5 to 10 years away from retirement, and you have questions about what is in your portfolio exactly, and if you're interested in investing appropriately in the current economic climate, you can call right now to get a complimentary, well, like they like to call a portfolio X-ray. This is good for the first 10 qualified callers, and it will shed some light on where you stand for in your retirement. The phone number is 614-336-7660. Once again, 614-336-7660. The phone number is right there on your screen. You can also visit legacyretirementgroup.com for more information. Always a pleasure when you guys come in. One question for you. Favorite Girl Scout cookies? Go.
Ooh, Thin Mint.
Thin
Frozen.
Mint? Frozen Thin Mints.
All the above.
I like the way
Every one of them I love.
Well,